Chain. Doge Chain is a layer 2 for Dogecoin. Essentially, this is a crypto casino. What Doge Chain does is it basically brings smart contract functionality and NFTs and DeFi to Dogecoin. So Doge Chain is actually built out with Polygon. However, you can just bridge your Doge coins over to Doge Chain. They are launching something, a token called DC, which they will be airdropping to Dogecoin holders, right? Problem is, they're going to airdrop these to Dogecoin holders on Robinhood, but Robinhood doesn't really allow withdrawals at the moment, or they've limited withdrawals. This could go viral. This could be potentially big and pump. However, we're not in a bull market. And when we're not in a bull market, what we're seeing is a rotation of funds that are already in this crypto market into Dogecoin because it is a quote unquote an opportunity to make money. However, there's not going to be a ton of exit liquidity coming in to the tune of which we've seen before. At least I don't think there's going to be, especially without Bitcoin and Ethereum pumping to ridiculous numbers, especially Bitcoin not pumping. Now, I do think we'll see an ETH bull market over the next 6 to 12 months, but without an overall just crazy bull market where we see these huge pumps, I just don't think that Doge is set to pump to crazy numbers. Now, anytime you're shorting Dogecoin or anything that's this volatile to the upside, there's risk of just being liquidated or stopped out. So I'm personally keeping this position very small. However, we can see we are moving into some strong resistance. We have our downtrend line here in white, which you got to be careful with these stop losses because you get these occasional pumps, these short squeezes that can push you out of the market, liquidate you, and force you to cover your position. So we've got that resistance. If we throw on our risk reward levels, we see that there's some resistance here between 8.1 and 9.2 cents, right? We see some horizontal resistance in this zone where we started to consolidate before spilling back off. So expect there to be resistance in that zone. Simultaneously, like I've already mentioned, we've got our downtrend line. But then if we throw on our margin pressure levels, our long margin pressure level tool here, and I'll get rid of our risk to reward tool so we can see this a little bit better. We see that in order to buy on the leverage and hide your liquidation point below this last local low of roughly 4.9 cents for Dogecoin, you can no longer do so once Dogecoin moves above 9.8 cents. So we're going to get some more resistance here if we do break through, right? So this gives us a really excellent place to hide a stop loss up here, because if we do break through this downtrend line, there's a strong chance that we come back down on top of it and we can get back out of our trade, out of our short position at break even, right? So we've got that resistance coming in. And then if we throw on our short margin pressure levels off of these